I'm super excited about this next guest, and let's go ahead and bring him over. This is John Kondrasky, President and CEO of Sugarbud. John and I have been talking for what seems like ages about the right time to get him in front of our audience, and that time, I believe, is now. John, welcome, man.
Thank you. Great to be here.
Yeah, no, this is exciting. No, correct me if I'm wrong. I just want to get these tickers out to our crowd here. On the TSX, it's SUGR, and OTC is long. All right, take care. Let's keep this moving right along. I'm super excited about this next guest, and let's go ahead and bring him over. This is John Kondrasky, President and CEO of Sugarbud. John and I have been talking for what seems like ages about the right time to get him in front of our audience, and that time, I believe, is now. John, welcome, man.
Thank you. Great to be here.
Yeah, no, this is exciting. No, correct me if I'm wrong. I just want to get these tickers out to our crowd here. On the TSX, it's SUGR, and OTC, it's SBUDF. SBUDF. Awesome.
Correct.
So I'm sure we'll have some questions from the chat, John, but why don't you take it away, and
Sure.
I'll be back.
Great. Well, listen, on behalf of the entire Sugarbud team, we're thrilled to be here, thrilled to be part of Benzinga. This has been a long time coming. As Patrick said, we've been talking for a long time. I think our business has really come a long way, and we're thrilled to give you some more insight in terms of what we're up to, where we're focused, and what where we're headed. So quick housekeeping, a little bit of disclaimers. We are going to be presenting some forward-looking information today. So I encourage you to refer to the disclaimers in our full investor deck, which you can download on this site and our website, www.sugarbud.ca, after this presentation. So let's just kind of orient around some key themes here that we're going to give you today. I think strong brand identity is one thing that Sugarbud certainly has. We literally what we do and what we stand for is in the name. So it's not any harder than that. This is a company that's squarely focused on specific areas of the market. Certainly the premium product side of the equation is where we are really aiming our time and effort in delighting customers in that segment. What you're going to see is in a very short period of time, this business has rapidly scaled excellent routes to market to drive future revenue and accelerate growth. I think one of the really unique features about Sugarbud really is the way we've set up this business as an operating model. Very lean, very agile, incredibly scalable, and certainly a high ROI model. So let's just get into it. Essentially, where we're focused is in the craft cannabis space. As our name suggests, we call ourselves a bit of a boutique craft company. We have never aspired to be the largest company in the planet, but we certainly aspire to be one of the best. I think our North Star remains delighting our customers each and every day with the products that we provide. It keeps us honest, it keeps us focused, and it certainly keeps the bar high in terms of what we do. As a company, we are set up around some major pillars to drive shareholder value. First and foremost, our people and teams really, I think, are our secret weapon. That is the group that really gets things done each and every day. It's a big reason why we've continued to execute at the level that we have. We think this is a fundamental and foundational element to our business, so we put a lot of time and effort into that. As you'll see throughout this presentation, focus and operating excellence is a key theme for us. As a publicly traded company, I think accountability, transparency is paramount. So we put a lot of time and effort as a corporation into corporate governance. We think that continues to be very important for our business. And then ultimately, we surround that around the customer. Everything we do is aimed at customer satisfaction. So product leadership and ultimately the quality that's underlying that product leadership, we think are paramount for our future growth and ultimately driving the shareholder value that we think this business has. So when you look at Sugarbud, the name might be known to some. We have been in the space for some time under development, but realistically, as a corporation, we've only been active in the Canadian space since August of 2019. And quite frankly, the balance of 2020, the vast majority of 2020, was really spent really driving strong operational cadence and foundation of the business. This is the cornerstone of one of our pillars. It's a key weapon for us to drive future profitability. And we really only entered the commercial space for real in Q4 of 2020. So in a very short period of time, we've established a very strong cadence, which we'll get into later in the presentation. We've rapidly established key routes to market, as I mentioned earlier. And I think the leverage that we've created with our operating model is already showing results in our financials. Some of these slides you've probably seen many times, either this week or in the past, but I think they're important calibration slides. I think it helps us all understand why we're excited about this space. Cannabis is not going anywhere. We're thrilled to be leading the world in terms of legalization here in Canada. The opportunity for growth in this space remains tremendous. I think for the focused organizations, there is nothing but upside to be thinking about moving forward. And we take a long view on this thing, but we're certainly excited about where the opportunity is going. But I think a key theme for us continues to be focus. And so we'll start to break that down a little bit here as we move through some of the market trends. The U.S. has obviously got a bit of a lead from many states like Colorado, California, Washington, Oregon. They're well down the road. Their markets are maturing. And so we can learn something from that in terms of what the Canadian experience might look like. Certainly, flower continues to be a dominant force, but we are seeing significant penetration by 2.0 products, such as vapes, for example, edibles, and then 30 beverages. In Canada, we expect the market to land somewhere around the same line, but for Sugarbud, our products are meant to be smoked. We're not shy about that. We have a very focused strategy. And when you look at pre-rolls, dry flower, vape pens, and other concentrates like hashish and rosins, there's plenty of opportunity for us to really leverage the premium flower that we manufacture and grow. And we think that there's tremendous opportunity for growth accordingly. A little bit closer to home here, if you look at three key Canadian markets, again, we're still maturing, so the ratios are a little higher. But it tells you that there's a tremendous amount of opportunity. Now, as many other presenters will note, it's getting more and more competitive in Canada. The growth rates are there. We're seeing retail purchases continuing to increase quarter over quarter, but the level of competition continues to go, and I think the bar is getting higher, and consumers are getting more and more savvy about what they're looking for and more educated, quite frankly, about what's out there. But nonetheless, we think that the key areas that we're focused in, specifically dry flower and natural adjacencies like inhalable vapes and concentrates, there's tremendous opportunity for growth. So when you think about our portfolio of products, as I mentioned earlier, we're a very focused company. We've picked a lane. We're not looking to be all things to all people. So we focus on a higher end product. We focus very much on quality. We focus absolutely on delighting our customers each and every time. And we're focused on very specific segments. So we look at dry flower as the cornerstone of what we do. It is the genesis of everything that we create. And ultimately, it is what our consumers are going to enjoy first and foremost. But we are looking at natural adjacencies. We've already launched a number of these products into the market. But dry flower, as I said, inhalable vapes and inhalable concentrates remain the focus for the business. So stepping back and looking about our approach or house style, if you will, to premium cannabis. In Canada, there's a lot of moving parts up here, just as there are in many other markets. There's almost a distraction on potency at this point in time. But we're a bit of a contrarian in that respect. We understand that potency is important. We certainly can deliver on that and do. But we look at many facets of cannabis to delight our consumers. And I think it's important to realize that cannabis, almost like food, is an experience. We eat with our eyes, if you will. And consumers that purchase dry flower, the first thing they're going to do is open a jar. They're going to smell it. They're going to touch it. Many times they'll weigh it. But they're looking for a variety of attributes that really set the table for a tremendous experience. And we're all about experience. So we think total value is critical in the value equation to consumers. So we spend a tremendous amount of time getting that right. It's over 35 to 40 days before a product even is ready to be sent to a customer after harvest. And that's because we hang dry for 14 days. We cold cure for up to another 14 to 21 days. We take a tremendous amount of time in post-harvest processing with our trim and hand finish to make sure it's right. And then we hand pack because we think that is the best way for customers to receive the product. And again, it really sets up the table for a tremendous experience. But this for us is how we orbit around total consumer satisfaction, and adoption's everything. Bringing people back, delighting them each and every day is just our primary North Star. It's what we focus on. And it is key, definitely, to our house style and approach to premium cannabis. So when you look at what we've established in the last year in terms of a product portfolio, we have 6 dried flower strains out. We just recently launched 2 really exciting strains. Mule Fuel, which is another high potency 20+%, but a really high terpene product at 4.5%. Cryptochronic 2, another mid 20%er, and terpenes higher than 2%. So we put a lot of time and effort into our flower. We've launched corresponding pre-roll lines. In this quarter, we will be launching our very first vape, which leverages our dry flower. It is a completely non-additive, no carrier oil, full spectrum product. And we're really proud of this formulation. We think consumers are really going to like that. And then early in Q3, we expect to launch our first concentrate product, which is a strain-specific flower rosin. So we continue to put a lot of time and effort into the development. We continue to put a lot of time and effort into leveraging our core competency and our core strength, which is really our flower and our genetics. And so far, the feedback we can get from our consumers is that we appear to be on mark. So we're really excited about the progress so far on this front. When you think about reach, the Canadian market continues to accelerate. Many presenters will tell you that it's becoming more competitive. The provincial boards are pulling their horns in a little bit. I had an opportunity to be part of Canadian legalization in 2018. The market dynamics couldn't be any more different. We've gone from if you have it, we'll buy it, to you really need to earn your time and presence on the shelf. We've got very intelligent consumers that are purchasing cannabis. They have a lot of needs that they want met, and you've got to really work hard to earn a place in their day if you're going to really enrich their lives and be a part of their daily consumption habits. So we're pretty thrilled with where we are today. We've established a very strong network of provincial partners and national partners. We are now actively selling products from BC through to Ontario. And we recently just entered Ontario. Actually, mid-Q2 is when we entered Ontario. This has been an exciting market for us. We were in BC and Alberta much earlier than that. But we certainly view Ontario as another catalyst for us. We're thrilled to be partnering with CanMart on a couple of fronts. We've partnered with CanMart on their vendor link to service and supply our products to registered medical patients nationwide. That's been an exciting opportunity to address a market that we're not totally focused on. We are definitely a recreationally focused company, but our partnership with CanMart lets us provide products to the consumers on the medical side that want them. We've also struck a deal with CanMart that's going to allow us for an early entry into the 2.0 side of the equation, and we expect to do that this quarter. And we've partnered with Velvet, a very, very prominent national sales and promotion agency, and they're really helping us get our message out to the retailers, at a granular level daily across our supply chain. So stepping back and looking a little bit at the market in general, how competitive it is, you look at it and there's over 677 authorized and permitted licenses in Canada to operate for cannabis. So it's an incredible bolus of competition and great providers coming into the market at once. I don't think we've ever seen this really in a space. I've been in medical device and pharma for almost all of my career, and I've never seen anything like this, where this many entrants come into a space so fast. But there still is some settling out, and as you can see, the opportunity to actually sell your products still remains fairly precious. So while there is an enormous number of LPs, not everybody really has access to market, which is why we're thrilled in such a very short period of time for the infrastructure that we've established and the cadence that we've already started to set for ourselves. As I mentioned, we have supply agreements in place with CanMart for our 2.0 products, but we are also running after our own 2.0 license. through Health Canada, which we think we should receive in early Q3. That just supports and augments everything we're doing with our partners like CanMart, but it certainly opens up more doors for us to be more nimble around accelerating growth in our 2.0 platform. So let's step into the facility for a second here and really get under the hood in terms of how we operate. I think one of the things that is very specific to us is that we operate out of a single site. We do this intentionally, and we do this for a reason. And that primarily is we want to limit redundancies, maximize our effort, and limit overhead. The line between net revenue and GP is where all this happens, and it's an important line for us. It's something that we've spent a lot of time thinking about early on, in an area that we focus on daily. So our facility is 29,000 square feet, almost 30,000 square feet in total. But we actually have the ability to scale up to almost 24,000 square feet of flowering canopy, which I'll explain to you in a little more detail how we do that. We're currently running at a capacity of approximately 2,000 kilos a year, with a maximum capacity of 12,000 kilos. So tremendously scalable. But I think the area that's most important is where we think our cash cost to grow will finish in 2021, which is already a very competitive $1.22 per gram. But we definitely know that we'll be well below $1 once we get more economies of scale into the facility. So this is a bit of our secret weapon, in as much as the time and effort that we spend on quality. So when you think about our flowering canopy, as I mentioned, it's almost 25,000 square feet. And we're using 3 dimensions to our advantage. Every flower room has to be a box, or is a box, essentially. What we've chosen to do is scale vertically in that box. Each layer is approximately 1,000 square feet. We plant a plant per square foot. So when you think of 1,024 square feet, that's how many plants that we put in each layer. It really helps us maximize the investment and capital that we put into our grow rooms. It lets us scale in any permutation from 1 layer through to 4 across 6 full grow rooms. So it gives us a tremendous amount of flexibility, a tremendous amount of agility, but at the same time really maximizes the return and minimizes the overhead required to drive out these production rates. When we think about how we produce and what's important to us, well, we're certainly looking at gram per square foot as an important metric. We look at yields as an important metric. I think you'll see shortly here that our guidance of between 85 and 100 grams per plant, or 85 to 100 grams per square foot. We're well within that. We're well on target there. Our velocity remains excellent at anywhere between 4.5 to 5 harvests per year, depending on the cycle of the room. And we've, the time and effort that we put into spending around setting up our operations in year 1, we've really been able to dial in our costs. We've really been able to dial in our manpower. So we've got a great handle on what we think is a very, very flexible, very agile, and certainly a high return operating model. When you think of scale up, for example, at 4 full layers, we're really looking at a payback period of just a year. And then for the life of that room, you're looking at anywhere from 4 to 5 harvests a year. So a tremendous payback on a very modest investment at the end of the day. So if you think about it, we've got 2 grow rooms currently under flower. We've got another potentially $6 million we could spend on getting to a maximum of 12,000 kilos a year, which is a very modest capital influx given the payback and the volume that we can generate in a very short period of time. So I think this definitely really highlights the agility and the speed with which we can run on a future.
Hey, John, this is Patrick. I just want to let you know we have about 1 minute left.
Yep.
So any final thoughts you've got for us?
Perfect. Well, let's just spend that really thinking about leverage. I think in a very short period of time, we've been able to accelerate the leverage that we're getting out of the business. But I think where I would really close is on this slide. I think this slide tells you everything you need to know about the cadence and the progress of the business here. Costs continue to be well contained. Harvests are going up. Revenue is going up. We're getting better on gross profit. Costs are coming down, and if you look at our average cost per gram, we've guided $1.22. We're already at $1.45. So I think our metrics and the infrastructure that we've set up are yielding the results that we expected them to. As it stands today, we're very excited about the balance of 2020, and obviously heading into 2022, we think we've got a lot to look forward to.
Well, John, thank you so much. I really appreciate it.
Yeah.
I know that there's probably some questions in the chat that we'll have to send your way,
Yeah.
but this is great, right? I love the idea of having you come on here and tell us basically how you're scaling a craft model, and all the care you guys are taking, all of the really the tradition and the experience you're bringing to that space is really interesting to me. So I'm sure we'll see you again soon, my friend, but thank you. Thanks for joining us.
You're very welcome.